if I buy something and it's gonna take 10 years to be obsolete, and I bought it for $1 million, if I write an expense for $1 million right now, I basically penalize myself. Because I'm gonna generate earnings from that asset over the next 10 years. So I kind of need to match. That's the reason behind depreciation schedules. Otherwise, I'll just write it off as an expense. We're done with it. But that limits the predictive usefulness of the financial statements. Because then, whether or not you make a lot of money in a given year depends upon whether or not you had a lot of capital expenses. Just because you spend a lot of money on capital doesn't necessarily mean that you're bad. So accountants have a reason to do these things. Let's take a break. Let's get back here at 7:35. Then we'll continue with statement of cash flows and cash flow definition, and we'll solve some more problems.
Could you scroll up on the notes here?
Sure.
Right after current liabilities. Right there, down,
Here?
down. That right there is good. Thank you.
I'm gonna give this to you guys as a PDF anyway. Let's continue. Before we do so, for the lectures you miss, I have the lecture videos over here. You just hit that YouTube playlist, and all of them come out. I don't make any money out of these, so if you subscribe to it, whenever I add a new video, it's gonna let you know. So you're gonna have today's lecture posted by about noon tomorrow, because I have to divide those, convert them into YouTube videos, which takes time. Not much of my labor, but takes time. All right, let's briefly talk about the statement of cash flows. This is a statement that decomposes change in the cash of the firm into its sources, and putting the sources kind of in quotes. These are called cash from operations, cash from investing, and cash from financing. So if the firm started with $100 million in cash, got to be 400 at the end of the year, that doesn't mean they made $300 million. That $300 million has to come from somewhere. Again, going to Starbucks, cash flow statement. It basically starts from net income, and it makes adjustments to it. Most importantly, it takes out the depreciation and amortization and some other stuff like stock-based compensation. When firms either compensate their employees by paying stock, they have to recognize that as an expense, but that's obviously not a cash expense. Or sometimes they give stock options to their employees. They have to recognize the portion of the value of that option as an expense, even though it's not a cash expense. And investing cash flow, it's basically how much money you spent on new capital roughly speaking, less how much you sold out, and cash flow from financing. When you borrow money, that's cash flow from financing. When you repay debt, that's cash outflow from financing, and so on. But we kind of use, at least in this class, where is it? Things like repurchase of capital or stocks, and there should also be cash dividends paid. Okay. Whenever we want to know those values, including depreciation and amortization, we come to cash flow statement. Other than that, we don't do much with it. Now let's briefly talk about taxes. When we talk about taxes, a few definitions. Taxable income. This is income subject to taxation. Depending upon the firm, not all income is subject to taxation. For example, if the firm owns municipal bonds, by their very definition, they're exempt from federal income tax and state income tax for the state that issues that one. So if you buy the bonds of the state of Kentucky, either as an individual or as a corporation, you don't pay any taxes on that. So-called average tax rate equals total taxes paid divided by taxable income. With the firms, it doesn't matter too much, but for individuals, we're going to also talk about marginal tax rate. This is the for the last dollar earned. As an example, you guys are going to do your taxes soon. I know apps take care of these days, but okay, let's do single filer. Okay, if your taxable income is below $10,275, you pay only 10% of that as a tax, federal tax. Between $10,275 and $41,775, you pay 12, but just for that portion. Next bracket, 22, 24, so on and so forth. Okay. So let's do an example. You made $135,000. After deductions and stuff. Last year. Filing single. How much are you going to pay in federal taxes? Let's kind of set up a spreadsheet. Tax rates, lower, upper. $10,275.